Hello, I'm Aidan Lambe. I'm the Director of Technical Policy here at Chartered Accountants Ireland. When the Financial Reporting Council published at the beginning of March FRS102, the financial reporting standard applicable in the UK and the Republic of Ireland, it marked the last piece in a jigsaw which includes two additional standards, FRS100 and FRS101. I'm joined today by Mark Kenny, who's Manager of Technical Department at the Institute of Chartered Accountants. And Mark has been closely involved in assisting the Financial Reporting Council in putting together FRS 102, particularly with providing the Irish legal references contained in the document. Mark, thanks for joining me today. Perhaps before we go into 102 itself, you might briefly summarise some of the background to the development of the standards and to where we actually are today following FRS 102's publication.
Thanks, Aidan. It all started back in 2002 when the European Union decided to require that the consolidated financial statements of entities listed on EU regulated markets had to produce their financial statements in accordance with EU endorsed IFRS. So the question then arose as to what all the other companies should do with their accounts. And the Financial Reporting Council in the UK has pretty much ever since been involved in a consultation process in this regard. And that culminated recently with, as you noted, the publications of FRS 100 to 102. Initially, it looked like they might require all those companies to also use EU-endorsed IFRS, but it quickly became apparent that that would be too onerous for the vast majority of those companies. And when the International Accounting Standards Board issued the IFRS for SMEs back in 2009, this was seen as an opportunity to use that standard as the basis for new UK and Irish GAAP.
So what we have had until now is essentially two accounting frameworks operating parallel with some similarities but quite a lot of differences as well. And FRS 102, I guess, addresses that issue by aligning UK GAAP to a much more closely with international standards.
That's correct. As I say, they used the IFRS for SME, which was produced by the same body that produces the IFRS standards, as the basis for FRS 102. Now, they've amended that standard for use in the UK and Ireland to allow for current accounting options to continue to be able to be used, but certainly many of the differences that would have been in existence have been addressed.
Just before we go to 102 itself, FRS 100 obviously provides the underpinning framework for FRS 102, but we also have FRS 101. Could you talk to us a little bit about that, what it's called and what it's actually meant to do?
Sure. FRS 101 is the reduced disclosure framework. It's a standard that will apply to the group companies, the financial statements of group companies other than the consolidated accounts, if they so wish to adopt it. It allows for IFRS groups to have consistent accounting policies across all the members of their group, while also allowing the financial statements of the parent company, not the consolidated accounts, just the individual accounts, and the financial statements of all the subsidiaries to have much less onerous disclosure requirements.
So presumably this will involve a cost saving for many subsidiaries of IFRS entities as we move forward in the new regime.
Indeed, I suppose that's twofold. On the one hand, some groups may have decided not to transition the financial statements of the individual companies over to IFRS because of the cost burden of all the disclosure requirements in particular. So they will have left them on the individual companies on a different framework to the framework that's used for the group accounts. And on the other hand, other companies may have decided that they wanted all the accounting policies to be consistent across the group, and therefore their subsidiaries would have had to have provided all the disclosure requirements in IFRS.
So FRS 102, which I guess is the standard that is particularly relevant for the vast majority of Irish companies, both large and small. What essentially is the impact of this standard going to be? What, for example, will happen all of those existing FRSs that are out there, and indeed the one or two old SSAPs that we all grew up with and that are still in force? What happens to those standards as we now move forward with FRS 102?
Well, FRS 102 effectively replaces the majority of those FRSs and SSAPs and UITF abstracts that are currently extant. And it's all amalgamated into a single standard, a single user-friendly standard.
Okay.
that people, both preparers, users, and indeed auditors should find more accessible.
Okay. And you said the majority of FRSs. Does that suggest that there are some that are still going to be left in place?
FRS 27 is the current insurance standard under UK and Irish GAAP. It is being replaced by FRS 103 in time, but that's not yet taken place.
Okay. So if we turn to the effect or the impact of FRS 102 on companies that are required to prepare true and fair accounts, what are the significant differences, if any, that companies will notice as they turn to apply this new standard?
I think probably the most significant change, and it's one of the main reasons why the FRC undertook this process, is that once FRS 102 is in place, all companies will have to account for derivatives. Okay. To date, FRS 26 applies to a certain limited number of entities, those that are listed and those that have adopted the fair value accounting rules under company law. But apart from those companies, no other companies were required to account for derivatives, and that will change under FRS 102. So that's the most obvious significant difference, which will have an impact on profit figures. Okay.
So for most companies then, are we actually saying that there will be really no noticeable change on the numbers that they're actually reporting, other than if they have significant financial instruments on their balance sheets?
Well, yes, I think it's fair to say that many private companies, particularly those involved in export trade, will have the type of derivatives that will need to be brought on balance sheet now, such as interest rate swaps or foreign currency instruments. Apart from those, there may be other changes. It will depend on the entity and the type of activities that the entity undertakes. But for many companies, they may not see that many other significant changes. Indeed, the ones that will be most obvious might be that we have to get a little bit more used to IFRS speak. So, for instance, we talk about inventories rather than stocks. We talk about property, plant and equipment rather than tangible fixed assets. So phrases like that will become more common. So
some tweaking to the software maybe?
Indeed.
I mean, in general, therefore, I mean, you've mentioned the slimming down in terms of the suite of accounting standards that is out there, from the 3,000 plus pages to maybe 300 odd pages. How has the standard been received by Chartered Accountants Ireland? Do we think it's a positive development, or do we have reservations about it, or what has the view been?
I think the view is generally positive about the publication of the standards. We've already talked about the fact that to date we have two different distinct frameworks, and I think everybody sees the advantages that will be gained by not having that situation any longer. We also mentioned the fact that financial instrument accounting will be brought up to date, which has always been seen as a significant weakness in the current framework. And I think it's fair to say that the profession has been supportive of the FRC all along, and that can be seen by the level of positive responses that it received throughout their various consultation processes. So yeah, I think the profession in general believes it's a good thing. And
I suppose there are the obvious benefits in terms of student training, that we can now be more confident that our students are being trained in frameworks that are much more closely aligned.
Indeed, yes,
than they might have been until now. Just concluding, when does the standard actually become effective?
It has a mandatory effective date of 1 January 2015. There are early adoption provisions within the standard, so people can go early if they want to. But for financial periods beginning on or after 1st of January 2015, they will have to apply the new set of standards, and obviously that involves comparative figures for 2014.
And do you have any advice for companies and indeed their advisors today who are now faced with the prospect of having to implement this standard over the next 12 to 18 months? What should they be thinking of at this point in time?
Well, I think it's fair to say that those of us who've been involved in the process for quite some time, we always wondered when we get to this point, but we're there now. Companies and accounting practices in particular will have to start getting used to the new requirements. So I'd say companies should be talking to their accountants sooner rather than later and trying to identify some of the changes that you mentioned that might be applicable to them, trying to make sure that their systems, their accounting systems, are FRS102 friendly, and perhaps looking for appropriate training courses that they might be able to attend to upskill themselves.
And just on that last point, training, I mean, presumably Chartered Accountants Ireland will be rolling out a programme of CPD and related training courses and tools in due course?
Indeed, we would expect that process to start fairly soon, and members should keep an eye out for Chartered Accountants news, the website, and our usual other sources of information for details as and when the courses come on stream.
Mark, thanks very much for talking to me today.
Thanks, Aidan.